Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Over the last few days, you guys have overwhelmed me with a lot of feedback and comments on my technical analysis videos, so I really appreciate that. Today we are going to talk about Netflix, since Netflix earnings will take place on April 20th after the market close. So what we'll do is to go over some of the factors that could potentially make Netflix spike or tank, and then we're going to talk about technical analysis. If you are a day trader or a swing trader, you're going to want to stay until if you are a day trader or a swing trader, you want to stay until the end of the videos where I will give you tips on Netflix trading strategies. With that in mind, let's get right into it. Netflix is currently trading at $546 at the end of the trading day on April the 16th. It is currently having a market cap of $242 billion with a 52-week low of $393 and a 52-week high of $593. Analysts is currently rating Netflix at a buy of a 2.1, and the average price target is $622. Analysts also currently estimate that Netflix will make $9.89 earning per share, with a projected growth for 2021 of over 20% and 2022 of over 15%. So we can clearly see that this is a double-digit growth company that will continue to grow for 2021 and beyond. Let's take a look at Netflix weekly chart first. What I see here are two things. Number one is a giant weekly bull flag. This is the pole. This is the body of the flag. It has been consolidating since July of last year. I do think that Netflix is cooking for something and it will break out. Remember what Kathy Wood says, the bigger the base, the bigger the breakout. The number two thing that I noticed is an RSI divergence. While the stock is moving sideways, the RSI has been moving up. So if I'm a betting man, I will bet that Netflix is going up in the next few weeks here, possibly the day after earnings. Let's take a look at the daily chart to zoom in a little bit. Netflix is currently trading at $546 with an all-time high of $593. Looking at the daily, it is currently sitting above 50 days SMA and 200 days SMA. So it is on a bullish daily pattern. Even on the daily, it also has a bull flag that is expected to break out as well. So the next few resistance level for Netflix is 553, 561, and 575 before getting to 593. So if Netflix gets to above 593, we expect it to break out big and it will make a new all-time high. On the hourly chart, Netflix is also consolidating between 545 and 555 for the last few days. I also see an RSI divergence here, so I do expect Netflix to move up on Monday and the day after earnings. Let's take a look at the earning analysis tab. The yellow line here is the actual earnings by Netflix, and the green line here is Wall Street estimate. So far, it is all over the place. So for example, in Q4 of 2019, Netflix came in well above Wall Street estimate, but the stock gapped down and continued down. In Q3 of 2020, Netflix came below Wall Street estimate, the stock gapped down and also moved down. But in Q4 of 2020, while coming in below Wall Street estimate, Netflix gapped up and pulled up. So it's really hard. It is all over the place. But one thing interesting that I noticed is that on the quarter that it beat estimate by a lot, it gapped down, moved down on the first day after the announcement, but the next day it moved up big. When it comes to gaps, there are two ways to trade the gap. The first way is to bet that it will continue to be widened, as is the case here. So on January 20th, when Netflix announced earnings, the day after Netflix announced earnings, it gapped up from 500 to about 564 and it went all the way up to 593. It ended the day at around 586. So it continued to widen the gap even though it opened up already with a gap up. Way to trade the gap is to bet that it will close the gap. So as is the case here, you can see in this red candle, it opened up the day with a gap up. So it closed the day before approximately 548 and it opened at 568, leaving a $20 gap. And gradually during the course of the day, it filled the gap and some. So this is also a very common technique for gap trade. Netflix, however, is really hard to predict. As I point out, it does what it does and it doesn't really conform to any particular pattern. It does often fill the gap, not necessarily within the same day. So you have to look at volume and the market sentiment together with the earning miss or beat in order to make the trade. If you're not entirely confident, definitely just observe. You'll do better with the next subsequent earnings if you observe correctly this time. So there's no rush to jump in a trade. Make sure you are confident and you understand the entry as well as the exit points. As for me, I won't be playing options after earnings or before earnings for Netflix. I do have shares and I plan on holding on to those shares for a little while. I'm not a die-hard investor in Netflix, but I think there's a swing trading opportunity, so I will be holding on to shares for now. So this is it for this video. Thank you very much for watching it thus far. I really appreciate all of your support. If you're new to my channel, please consider subscribing and like this video so I can make more video for you guys. Comment down below if you like similar series of technical analysis and earnings series, since we are at the beginning of earnings season. Thank you very much and I look forward to seeing you again in future videos. Bye.